All right, today we're going to talk about a stock that has been on an absolute rocket ride. Applied Digital, ticker APLD. We're going to jump right into the technicals, break down the signals behind this really explosive triple-digit move, and see what the charts might be telling us about what's coming next. So let's just kick things off with a headline number, the one that makes you do a double take. In just 3 short months, APLD stock shot up over 240%. I mean, again, that huge in that little time is just staggering. And it really forces us to look closer and ask, what on earth is going on? So how did we get here? Well, this timeline lays it all out. It all started back in mid-July, with the stock just kind of hanging out around 10 bucks. But then, look at these massive spikes in trading volume. That's a flood of investor interest just pouring in, driving the price up on an almost vertical climb to a peak of over $39 by the middle of October. Just incredible. And all of this crazy climb, it brings us to the million-dollar question, right? After a move this fast and this furious, you have to wonder, is there more fuel left in the tank? Or is gravity about to take over? And what's so fascinating here is that the technical data is pointing in 2 completely opposite directions. Okay, so first up, let's explore the bull case, the argument that says this rocket still has plenty of room to climb. So the bullish argument really rests on these classic signs of pure strength and momentum. I mean, you've got the current price trading way, way higher than both its short and long-term averages. On top of that, you have technical indicators that measure trend strength just maxed out, and other signals that track momentum are strongly positive. When you see all of this together, it paints a textbook picture of a stock in a powerful, confirmed uptrend. You know, what this really means is that the stock has sort of detached itself from its old home base, its historical price levels, and that signals intense, sustained buying pressure. It's like investors are saying, hey, we think this company has found a new, much higher baseline, and we're betting it's going to stay there. But, and this is a big but, for every one of those bullish signals, the chart is also flashing an equally compelling warning sign. So let's flip the coin and look at the bear case, which tells a completely different story. Now, before we look at the data, we gotta get this key concept down. Overbought. Just think of it like a car engine that's been redlining for way too long. Yeah, it's performing at its absolute peak, but it's also running dangerously hot, and, it might need to cool down or risk blowing a gasket. And one of the best gauges we have for an overheating stock is the RSI, the Relative Strength Index. It's basically a momentum speedometer. The general rule of thumb here is that any reading above 70 suggests the stock is in that overbought danger zone. And this is where the alarm bells really start to go off. As you can see on this chart, APLD isn't just a little bit over 70. Its RSI is at a scorching 86.2. That is deep, deep into overbought territory, and it's a huge sign that this recent price explosion has been incredibly aggressive and might not be sustainable. And hey, the RSI isn't alone here. The price has literally pushed past technical levels that often act as a kind of ceiling. You have multiple other indicators that measure buying and selling pressure, and they are all screaming overbought at the exact same time. The consensus among these tools is crystal clear. This stock is stretched dangerously thin. This slide right here, this captures the tug-of-war perfectly. On one side, you have every sign of a massive, powerful uptrend, and on the other, you have a whole chorus of indicators just screaming that this rally has gone way too far, way too fast. This is the central conflict for APLD. Incredible momentum clashing with undeniable signs of exhaustion. So, with such conflicting signals, how in the world could this play out? Well, the analysis points to 3 main potential scenarios for where the stock might go from here. Okay, so there are really 3 basic paths from here. Path 1, the bullish scenario. Momentum just wins out, plain and simple, and it pushes the price right back up to test that recent high. Path 2, the bearish scenario. Those overbought warnings were right all along, triggering a pullback to a key support level down around 25 bucks. And then there's the third path, the neutral one, where the stock just chills. It moves sideways, consolidates, and basically catches its breath after this marathon run. Think of these prices as the key battlegrounds. That $39.33 peak, that's the ceiling. The bulls have got to smash through. But if the stock starts to fall, the first line of defense is around $33, with the most critical floor of support sitting down at that 20-day average near $25. Whether these levels hold or break is probably going to decide which path the stock takes. So after weighing all of this conflicting evidence, the source material actually offers a very clear final takeaway. And the final word is this: the trend is undeniably strong, but the risk of a pullback is high.
The core message here is caution, caution, caution. This is the very definition of a high reward, but also very high risk setup. So when you boil it all down, this entire analysis comes down to one fundamental conflict. It's like the unstoppable force meeting the immovable object. You have a confirmed, powerful trend clashing head-on with these huge flashing signs of exhaustion. And that leaves us with the final hanging question. In the story of APLD's incredible run, what happens next? Will the sheer force of momentum continue to defy all the technical warnings, or will the laws of market gravity finally and forcefully take hold?